This is WTF, Westbank Talks Finance. And on this episode, we are looking at perceptions, perspectives, and answering real questions from real people on one of the most talked about finance topics, balloon payments. I'm Lebogang Khawaketse. So what exactly is a balloon payment? Think of it like this. Instead of paying off the full price of your car in equal chunks, you hold back a big portion and park it at the end of your contract. That's why your monthly installments look cheaper along the way. But when you reach the end, you'll still owe the big amount you held back. And that has to be paid in one go. That's the balloon. It can make buying a car feel easier upfront, but it also means you've got to plan for that big payment when your agreement term is up. There are plenty of misconceptions about balloon payments. So let's go through your questions and clear things up. Here's the first one. How does a balloon payment reduce my monthly installments? By holding back part of the loan, the balloon, until the end, the bank works out your installments on a smaller balance. That makes your monthly installments cheaper. But here's the thing. You are still paying interest on the balloon amount all the way through the contract, which means you'll pay more interest in total by the end, and that's why the total cost of credit ends up being higher. Next up, is a balloon payment the same as a residual? On the surface, they may sound alike, but they are not. A balloon payment is part of an installment sale. A residual value, on the other hand, is something that comes up in the rental deals and the bank carries the risk. But you are tied to mileage and condition limits. You'll face penalties if you don't stick to those limits. A note on this, Westbank doesn't offer rental agreements to private individuals. Here's another one. I thought a balloon payment is like a deposit. I'm confused. It's an easy one to misconstrue. Both deposits and balloons make your monthly installments lower, but they work in opposite directions. A deposit is money you pay upfront, whereas a balloon gets pushed to the end. A deposit reduces your loan amount from day one, and it doesn't lead to paying more interest in total, like with a balloon. So what happens when you reach the end and the balloon is due? Well, you've got a few options. You can pay it in full if you've saved for it. You can trade in or sell your car, and if the value covers the balloon, you're sorted. Or you can extend your loan term to absorb it. Another option is to refinance the balloon amount with a new loan. Here's an example. If your balloon payment is 90,000 and the dealer offers 100,000 on your trade-in, you'd clear the balloon and still have 10,000 rands left over. But if you are only offered 80,000 rands for your car, you'll have to find 10,000 from somewhere else to cover that shortfall. Or if you don't want to trade in the car, you can extend your current finance term to cover the 90,000 while paying the same installment. Or you can refinance the 90,000 balloon amount as a new loan, either with the same credit provider or a different one. Let's talk about the upsides and the risks. The upside is obvious. Lower monthly installments, easier cash flow, and sometimes access to cars you wouldn't otherwise be able to afford. The risk is just as clear. You pay more interest, you need a solid plan for the end of your contract, and if your car's value is less than the balloon, you'll be on the hook for the difference. Balloon refinance or extensions aren't guaranteed either. Please be aware that refinancing means you'll need to qualify again. It's a brand new finance agreement. Also, by extending or refinancing keeps you in debt longer. Here's an interesting one. Can I choose any balloon percentage I want? You can ask for the percentage you want, but the credit provider needs to approve it. For passenger cars, the industry standard usually sits between 10% and 40%. It depends on the credit provider's policy, the car's expected value at the end of the contract, and how long the finance agreement is. Used cars and longer term usually mean smaller balloon percentages. Okay, this one really stings. What happens if my car is stolen or written off before the balloon is paid? If your car is stolen or written off, you request a settlement letter from the bank and your insurer pays that amount, or as much as your cover allows. If the payout is less than what you owe, you'll need to cover the difference. That's where shortfall cover can be valuable. Next question. Can I refinance the balloon payment if I can't pay it at the end? Yes, you can, but only if you qualify for a new loan. That depends on your credit record and affordability at the time. And remember, refinancing means more debt and more interest. Final question. I thought I owned the car after making all the monthly payments. When you agree to take a balloon, you are agreeing to paying monthly installments for the term plus a lump sum as a final payment once all your installments are complete. You cannot become the title holder of the car until you've done both. To wrap up, let me share a cautionary note. Not being ready for the balloon payment at the end of your contract puts you at risk. If you're unable to refinance or extend the loan, for whatever reason, your car could end up being repossessed to cover the outstanding balloon amount. That's the reality. So please, plan for the balloon to benefit from lower installments. Otherwise, rather shop around for a car that matches your affordability without needing a balloon. That's a wrap on balloon payments. Lower installments now, but big commitment later. If you've got questions we didn't cover, drop them in the comments and we'll answer them there. And if there's another car finance topic you'd like us to tackle and unpack, let us know. You could inspire the next episode of WesBank Talks Finance. Thanks for listening.